I want to get your thoughts on Q4. JPMorgan, in their writing about the debasement trade, said that they think it could push Bitcoin to 165K this year. And like I said, Paul Tudor Jones is calling for sort of a blow off top. I'm curious what your mindset is going into Q4. I know you don't like short-term predictions, but do you see Bitcoin at 150K, at 200K? Do you think 165 makes sense? What are your thoughts for Q4 as we see this sort of adoption and new wave of capital start to come in for the first time?
Yeah. So first of all, I've been talking about Bitcoin getting to 150 to 180 for a long time, for years here. And I figured sometime in the fall. I thought it was going to hit 150 to 180 sometime in November. I guess it's not out of the question here. You know, I mean, Josh Mann thinks it might go to 444. I don't know about that, but I do think that we're going to see an expansion in the price of Bitcoin here, because we're seeing an expansion in liquidity. And what's happening is you've got the central banks are easing. You've got the Fed is now easing, and you've got some factors here that are going to cause it to continue to ease. You've got China, who is expanding on their liquidity and their money supply, and that is going to start feeding into risk assets around the world. Japan has been, if you're watching Japan, they have a new prime minister who was just elected that is akin to Trump. And the thought there is that liquidity is not going to stop in Japan. And even though they are in a precarious position of being the largest buyer of their own bonds, the largest owner of their own bonds, having done yield curve control for many years here, and now sitting at a spot where their yields have spiked up significantly. And so what's going to happen there? Well, the idea is that the thought is that, look, this has been the carry trade for the world, where you can borrow yen cheap, and turn around and buy risk assets around the world. It's just access to capital on the cheap. And the thing is that that's going to continue now with her in place. So that's a big deal. Another big deal is that, as we've seen just this dearth of volatility in both stocks and bonds recently, that means there's access to more capital, because it requires less collateral to borrow against. So that's an expansion of liquidity. I talk about Michael Howell a lot. Cross-border capital. He's got a great liquidity measure that he likes to look at, that I think is probably the best that I have access to in the world. I really respect the work he's done. I don't know exactly what his calculations are, but I know what's in the pot, and so things like bond liquidity, bond volatility, shadow banking, meaning hedge fund and private capital, the central bank, the QE, QT, like all that stuff is in there. And that's really the measure beyond M2. M2 is one big factor in it, but then overarching all of that is just, we're a world built on debt, on leverage, on borrowing, and that's what's going to keep driving this. And I believe that that's going to keep expanding through this year and into next year. And that cycle of liquidity is just continuing up here, and it's going to probably top out sometime next year. So the answer is, I have a high degree of confidence that we're going to continue to expand. Do we have a blow off top? Well, it would seem that that's where the market wants to go here. Just if you look at the emotion of stocks, if you look at the psychology of them, we just keep reaching new highs. It feels like we're going to get to the point here of just absolute ridiculous FOMO across the board. I don't know when that is, or how that plays out for Bitcoin, but it just feels like that. And it feels like I feel the echo of 1998, 1999 here, where you had all those internet stocks. And, it was just madness. You're too young to remember this, but it was, you would buy an Amazon or a Google, it would be up 20, 30, 40% in a day. You're just like, wow, do I sell it? What do I do? And then it's up another 40% the next day. You're like, oh my God, what is, this is just insane. Especially the smaller ones, not the bigger ones like those. But so The problem with the market is that the breadth is very, very consolidated with the AI. The Mag sevens. That takes up the vast majority of the index now, and that's a little bit worrisome. But if you look at the indicators of what's going on and where the Fed is right now, which is they're a big driver of liquidity. I just expect liquidity to expand going into this quarter, and so I'm continuing to be long. I have hedges on in case we have some sort of black swan event. Best we can do, but by and large, we are still invested.
So one of the first guests I had on my Milk Road Macro podcast was Michael Howell. So if anybody missed that episode, I suggest you go back and check it out. But I think that's a great place to start from, is that liquidity point of view. And then this idea of concentration. I had Jordy Visser on last week, and he talked about that concentration in AI as well. So yeah, just again, a lot of really helpful perspective on that. I want to ask your thoughts on something here. The Bitcoin bull run that we've been in this time has felt much different in many ways than prior bull runs. There's been a lot less euphoria. And I think a lot of people, especially viewers of this channel, people who are in our Milk Road Pro community, crypto investors in general, are feeling like we've been in a steady grind, but we haven't really had much of like a big, massive breakout. How are you thinking about this change in dynamics? How are you thinking about this in terms of like how the market is treating this asset class differently? Is this a sign that it's maturing, or are the big returns gone from Bitcoin and crypto and those days are kind of behind us? How do you think about this changing market dynamic we've seen?
Yeah, so there's a few things to unpack there. First of all, the old thinking, or the traditional thinking on Bitcoin, traditional, it's only been around 15, 16 years, but was that as you get through these market cycles, these 4-year cycles, they were attached to the supply. So the mining and the reward and the halving every 4 years. Well, that is absolutely, I believe that is absolutely the huge driver beginning in the first few cycles. But now as we get along here, and that reward becomes less and less important for just the number of Bitcoin that are out there, and just as a percentage of the new supply, it just becomes, it's not as important. What is important is the hash rate and the cost to actually mine these things. Number one, access to energy too, which they're finding all kinds of ways to mine for just pennies, per kilowatt. So that's one thing. But really, the big driver of this latest cycle, I think, is getting much, much more closely tied to what we just talked about, the liquidity and global liquidity and expansion and contraction of that liquidity and money supply. And so, and you're seeing that kind of in real time on a lag. What do I mean by that? Well, when you look at somebody like Michael Howell's work, he'll plot the liquidity, and then he'll plot Bitcoin on a 10 or 12 week lag behind it, because it takes that long for that liquidity to see itself, to see the liquidity driver in the price of Bitcoin or in the price of gold. So it's a little bit different than securities. So that's one thing. The other thing is, if you look back at the 4-year cycle, what's interesting is that it matches up perfectly with our presidential cycle. And this last presidential cycle was extremely important. And what I mean by that is that we had a quite an antagonistic cabinet previously, and administration as a whole, through Biden and his administration, and particularly the psychopath out of Massachusetts, Elizabeth Warren, and her anti-crypto army. I can't imagine a worse senator for the citizens of Massachusetts, but they keep electing her for God knows what reason. Just lining her pocket every year in her insider trades. But anyway, so the interesting thing is that when we had that election, you could see the run up to it, and people realized that Trump was really gaining momentum here, that the mainstream media was completely wrong, that he had a lot of support, and suddenly that quiet support he has was getting more and more emboldened. Flash forward today, it's very emboldened. But the thing is, when I launched my fund, the Bitcoin Opportunity Fund, John, which was right before the election, it was in 2023, and we experienced firsthand what became known as choke point 2.0. And for your viewers who don't know what that is, choke point 1.0 under the Obama administration went after industries that they didn't like. Things like firearms, guns and ammo, pornography, and what they said was, if you're a bank and you're doing business with these companies, with these outfits, that we're going to come after you. And so that was known as choke point 2.0. It was pretty much behind the scenes, and they just choked off all of these businesses by the access to actual capital through the banks. If you don't have bank capital, bank access, then no surprise that something like Silk Road would pop up. But flash forward to the Biden administration, and Elizabeth Warren decided she didn't like cryptos. And so she was going to go after the crypto companies, the crypto bros. And so any business and any bank that was doing business with them was going to be scrutinized, and possibly have these long drawn out audits or whatever it may be, sanctions, quiet sanctions. And so, and we experienced it. So when we were raising our fund, we call it the Bitcoin Opportunity Fund. And so, and it's Delaware, it was formed in Delaware. So we're a US based company under Delaware rules and operating in Nevada under Nevada rules, and all above board, we did all our registrations with the SEC above board. Everything's laid out to see. But because we had Bitcoin in the name of our fund, we're just a traditional hedge fund investing in Bitcoin companies, but banks refused to send wires. They would delay them. They debanked a couple of people who were trying to send money to us. And then they just cancel them. They would just cancel wires that were sent. And so flip to the 2024 election, when we get a new administration, and suddenly all of that, the SAB 121 was repealed fully. For going back to the people who don't know what that is, a little bit more, just a little bit deeper here, John. SAB 121 was when the SEC did an end zone run around Congress and decided they're going to do an accounting bulletin that basically said, if you're a bank and you're doing business with cryptos, you're holding Bitcoin for a customer, then you have to put in your balance sheet as a liability. And it was messy. And so nobody wanted to do business with any crypto companies, any Bitcoin companies. And so Congress got angry because they saw it as an end zone run. They're like, you can't just do a bulletin. Like, this needs to be legislative. So they overturned it, SAB 121, through a vote. It got to Biden's desk and he vetoed that overturn and said, no, we're going to keep it in place. Well, one of the first things that Trump did when he came in is he said, well, we're going to undo that veto. We put in a new commission, the SEC, and they issued something called the SAB 122, which overturned 121 and said that it's okay for banks to start doing business. So why do you think is it surprising now that you have JPMorgan and Morgan Stanley suddenly saying, maybe you should own some of these? Oh, and by the way, we're going to be offering this through our platforms. Come on. So, but we've had one wire that had trouble in the last, since the election, and we launched a new fund, Bitcoin Opportunity Fund 2. And we've had one wire that we had trouble with, and it was coming out of Canada. And so it's completely switched. And so that's been a big deal. Yeah.
Want insights on what's moving crypto markets and how we're trading each event? Subscribe to our channel and join the Milk Road Daily and Pro newsletters and start investing like the top 1%. This show is for educational purposes only. Nothing we say is financial advice. Investing is risky. Never invest more than you can afford to lose.